What's up everyone, welcome to this session with me, Ross-rfx. Now of course we are here to show you the ideas we have for the market today and then walk you through any possible entries that present themselves. So guys, this session is going to be relatively long.
We have then taken the SP, and price has continued to run as we thought it would, to the higher point of liquidity. Now the only point left within this range is the external liquidity being the swing high, which is this high.
As we're recording it from the beginning of our day, which is 9:15 right here. Now, of course, some people get on the charts earlier, some people get on the charts later. I have to do the school run, so I'm unfortunately locked into the time that I have to trade. Now, this is not an issue because it's not about what time you trade, it's about where you choose to trade from. We are going to be walking you through some possible entries if they present themselves, and overall, we're going to be covering what we expect for price and how we begin to interpret that rather than having an expectation and expecting it to be immediately filled. So what we're going to be looking for is the reactions within given areas that we're going to highlight. Then we'll talk to you guys about how we can begin to interpret what price is about to do, and then we will enter if any positions are available. First things first, we have euro to the US dollar right here. This last night broke our swing high. Now this in fact changes the narrative from bearish to bullish. Now if you look at the range that we had established as bearish here, you can see that price didn't actually break down at all. There wasn't a single point where price actually broke down. The whole time we were within this range, it maintained a bullish movement from the counter structural break here, and this area of demand took us all the way above our swing high. Now we have created liquidity within here. We have come back to the origin of said liquidity, and we have now changed our direction again, meaning that the narrative is most likely going to continue in the new directional bias. So what we're going to do is we're going to get down into the smaller time frames in a second and take a look at what has actually happened within here. We're just going to mark off our sell side here. We're also going to pull out our swing low, as this is the last point of market manipulation within here. We're going to tuck in these zones as we don't actually need them anymore for what they are presenting, and we're going to mark our lowest unmitigated order block, which is actually this order block right here, although I don't believe we're going to get there. This becomes our new target, swing high, and we will look for a position within these points. Now immediately what I'm seeing is a two-stage liquidity delivery here, one coming from the origin of this area right here, and then the second coming from this delivery with the origin right here, which has actually been hit now. Based off of this, we have an SP right here, which is our shift point. Okay, that tells us that price is most likely coming to the origin of the liquidity that has been created within. We also have a new SP right here, which has not been hit, therefore we do not expect price to travel through these highs as of yet. We can do is we can look up the movement between the price ranges, which is here. You can see 7.3, and if we hit this upper area, we have around 6 pips. So this overall is the possible expansion that can come from interacting with a given high. So the reason why we mark these is because if we're interacting with a given high, price is telling us that it's seeking liquidity to the upside, for example, by taking a high, or if we run a low, it's telling us that it's seeking liquidity to the downside. Now, we will be joined shortly by the VIPs in the trading floor, and we are in fact going to include some of their questions in this video to give you a nice insight into how the VIP trading floor functions. This session is purely to show you how the market moves on a live price chart, even though most of you probably know already, but it's mainly down to how we are going to perceive it, how we are going to wait and pounce on the opportunities that are offered to us. Now we are going to look at doing some short-term scalping. We are going to look at taking the overall swing range moves themselves that you guys can also apply if you learn the systems properly. With what we've just said in mind, running up to the buy side origin right here and achieving that as a liquidity goal is relatively important. Now, the reason for this is because the area of supply above, right here, has provided price with further downside. Now, this isn't a major issue. We sit within our range, which is this swing low and this swing high, meaning that price is only at around the 50% currently. Now, when we are looking into this principle, price does not have to respect the 50% and drop away or go higher. Generally, we look to the 50% for a worst case scenario. So for example, 50% within the higher time frame range is like the minimal pullback that we'd want to see. Sometimes we'll give a bit of discretion and go higher, sometimes we'll go lower. Generally, we want to see the 50%. Now, for anyone that's having trouble visualizing it, this right here, 50% line here. So you can see we came below it, we've pushed back above. Now we're starting to push down again. Now there is some smaller time frame work that we have to do here, as we have taken the sell side origin here after running the lows. And for anyone that's interested, the SP would be here. So once you hit that level, which is the last low that put in a new high within this liquidity creation, once we hit this, we would look into the window that is created right here. And the window is created between the low of the SP and the high that it created, okay? So that is going to give you an area like so, where you would look for an entry to sell away. Again, we're not walking into one particular system today. We're going to be guiding you through a collective. So we want to make sure we cover all bases. So as it is, we have an SP to run higher right here, which is the second stage of this liquidity here. We have our buy side origin sitting 6.1 pips above it. We have our swing high right here, which is the ultimate target for us. But as we stand, we have a couple of points within here as well. We have a liquid low right here, which sits just above our POI, which would also be known to a lot of you as inducement. We have the reactionary point here at the sell side origin, which we are going to highlight in orange as well, as it has been hit now. And we have since taken this SP and ran to the buy side. Now, this gives us a window of this to this, okay? That becomes your buy side window. If we come down to the 1 minute time frame here, what we're looking within our buy side window is pretty much what we already have, which is very interesting. Now, look at what we're doing across these highs. We're generating liquidity across these highs, right? We are generating liquidity. Now, the key element to this is we're looking for a microscopic version or a fractal version of the higher time frame liquidity displacement to provide us with a new shift in bullish narrative, in this case, for us to then follow from an area of unmitigated price action. So as it stands, we came up above the SP, we've come back in, we took out the previous SP, creating another window coming from here to here. We are now doing the same thing. So if we have a look here, what we're going to do is we're going to track our last low. So let's just mark this up here. SP to the upside, window low, window high. Liquidity origin for this sits at this high, which is actually great. And the liquidity origin is either a major high or low, or the first high or low that represents the collective of highs or lows that are following the same trajectory, making sure that there is either an area of volume, an area of imbalance, or an area of unmitigated POIs. But if there's an unmitigated POI, chances are there's going to be some form of imbalance, right? So generally you can use the imbalance as the go-to. In this case, it's this high, as it's the first high that represents the push through. You can see this is the high where the volumes came into the market, and we consistently put in new lows from that point. So within this window right here, we are consistently putting in lows, okay? So if we just track the highs and lows within here, this is our first high, second, okay, we put in a new high here, but it fails to put in a new low. So this high becomes your next, that becomes the next high, high to low, low does not put in a high, high, everything is encased within the range. So right now we're sitting within this range. So ideally what we'd want to see would be one of two things. Okay, and this is for a possible buy opportunity within here. This being the SP of the new move. So if we take this, we're going to run up to this movement here, okay, which is a very minor gap, but it can allow you to get your entry. If we run down to this low, then we'd expect to see a liquidation, then a run of an internal 1 minute structure, okay? So as it stands, within the 5 minute, you can see that we don't actually have any major liquidations of any candles or anything like that, so nothing huge to showcase there. But if we take this SP right now, which it looks like we're going to, just pull this in. There we go, perfect. We're taking this. That is now validated buy side from this area. Validated buy side from this area. So you have a couple of choices. You can either run from this point right here, TP being at the swing high, okay, giving you a 1 to 3.9, so nothing huge. Or my preferable option would be wait for price to pull back like so, and trade off of one of the areas within here if you see price giving you a valid reaction. Now a valid reaction would be something along the lines of this. So a liquidation like so, then running either this low or this low, then price to sweep the candle high or low based off of your direction that has caused this movement, and then allow price to play back in on itself. So for example, running the low here like stated, running the same low, then allow it to run back in, take the high, and then that will become your window to trade this higher. Okay, so let's just put that back in there for representation here. Ideally, we want to see this low swept out, so we don't really want to jump in like this, but what I'm saying is this is an example of a way you can utilize this. Ultimately as well, we'd realistically need to be putting our stop below this major low here, rather than the low we are looking to be liquidated, as this is all within the window. So for example, this high to this low is your window for buy side. If price decides it comes down lower, liquidates the low without breaking, then it wants to go long. Your stop would have been tagged when in reality the buy setup and scenario is still valid. Okay, so we just put this to the side here so you can see the principle here. I am looking for this liquid low to be tapped or at least met to some degree. This low here still holds liquidity, so if we take this and see a pattern that tells us that we're most likely to go long, then we can look to follow that. On the 5 minute right here, you can see that we are forming a very nice liquidation of this high, and this high. So the last 4 candles have been liquidated. Ideally, I would love to see price come down, take out this end, then an entry occur. That would be the ideal for me. So what we're going to do is we're going to set some alerts on the lower end here. I'm going to set an alert on the upper end as well. And we're going to come back when these alerts have been hit. Okay guys, so we are back now with a push higher, which after taking this high is the most probable scenario until this point right here, which is the buy side origin. Now, as I said earlier, the preferable entry for me was to run the lows, then to get an entry down here, and for price to go long. Overall though, every point of this trade and scenario is valid. That's why we threw this idea on the charts right here, because it is a valid entry in regards to this scenario. Now, if it wasn't for the relative equal lows down here, I probably would have had more hope in it just running straight to the high. Now, if we look at what we have here, ultimately, if we take this buy side origin right here, we zoom out a little bit, we are most likely going to run to this buy side as we have already initiated this. In principle, let's recap. We took our first SP within this liquidity, telling us that price is most likely to run between this SP to this high, which is 8.2 pips. We have since taken this SP, which tells us price is most likely to run 3.7 pips to here, and ultimately if it's running this distance, it will more than likely run to this high here, giving you a collective of this whole move coming out of here. And ultimately if we take this high, we should hit this SP, which should then lead us into the 6.1 move between the SP at 18334 and the high at 8394. So ultimately, if we pull this down to look at where the entry to the move right there, that's a 17 pip move that we have systematically worked out to be ran through depending on how price reacts at a given window within price. Now, of course, there's always going to be someone that has a different perspective of this. There is no right or wrong in trading. It is a subjective topic, whether you're using certain elements given to you by one person or another person. You can draw lines, you can draw squiggles, you can stick emojis on your screen. As long as you understand the principle of what you're looking at, that's the main element. So like I said before, if you do follow this system and you know how to follow swings, how to follow the 5-minute ranges, how to track liquidity, how to look for your entries and so on, then you are going to have a very consistent bias within here. So we're just going to let this play out. We will flick through our other charts, but as I said, we will be expecting the VIPs to be joining relatively soon. We have not opened up the trading floor just yet, as we are still setting up here in the office. But as I said a minute ago, I'm just going to let you guys watch this play out. A couple of notes to make here. If you are entering at this point, hitting the buy side origin, so hitting the SP then the buy side, that is the parameters of that move, okay? So if you do break down from here, then it holds a probability of running the previously created lows. Now the reason for this is because it's telling us liquidity is being collected at this point and ran back into the newly created range. Now ideally we would look to secure profits within this buy side origin here if the RR permits. Now the reason I say if RR permits is because if you have a 1 to 3 or a 1 to 2 and you're chopping that thing down by 25%, 50%, you're pretty much reducing your trade RR collectively to a down to about 1.7, 1.8, which is okay, but ideally this is why I wanted to have a tighter entry so that if we did run high, we had a lot more RR to chop down as we move. So ultimately we'd expect price to react here with some sort of pullback. Whether it comes all the way back down or not is obviously dependent on the true liquidity basis, but as we have it, we should be running up to here. We will probably see it again, a small area of pullback price action happening, and then we expect this to get hit. Now if we do not hit this upper line here, which is the higher time frame SP, then we will look for price to pull back deeper and possibly look for another entry. But at that point, we will have a relatively high amount of liquidity across our base here, and we will keep in mind that we are sitting still around the 50% within our range. Okay guys, so if you were watching right here, you can see that we have an area of supply which is actually pre-mitigated, but it caused price to break down relatively at this high. Now what we are looking for is price to not take the low produced by this area of supply and to run the highs. If we run this high, in turn we will be running up to the next buy side origin. So I'll check back in with you very shortly. Beautiful play there. Exactly what we thought we would see, and as we've said many times before, running through that liquidity with relative impulsiveness. We now look for this high to be taken. At the contact of this high, do expect either one of two things: a consolidation within this relative area with a possible pullback, or a small consolidation with an expansive move up to the higher SP. Now, if the pullback does give a strong move to the downside, there is a possibility that order flow could re-establish itself bearish again. We are within a bullish swing range. We are within the parameters of looking for a buy movement. So everything aligns with what we want to see, but of course there is always the possibility that price may go against our pre-established notion of where it is actually headed. We'll be back very soon, and the trading floor is opening in 2 minutes time. Okay, so if we do break down here, then that is completely fine. We still have a valid area within here, which is the last zone that was created after we pushed higher. Now, overall, we are putting in a high to a low to a high to a low. So if we take out this low and we establish a new high, that in turn will be its own liquidity build with an SP in place. So this low has been ran now. So next point is we need to come up and take this high right here to re-establish our bullish narrative. Otherwise, we could be sinking down, taking out some of the pre-established lows that we created within here. Overall, the trade was entry around here. We said about partialing here. Ideally, we want to see price come up to this high. But as it stands, we have broken the first liquid low to the downside. So there is a chance of deeper movements to the downside, unless we come up and take this high right here, which would re-establish our bullish narrative. Just for the video purposes, Easy Trader in here with us in the VIP trading floor has asked us a question: if price comes back to the entry point, is it still okay to enter? Now, as it stands, the answer to that question is no. But there is a couple of possibilities that can change and present the overall entry again. Now, those are if we come back into the entry area, so the window that is established here. Okay. If we reconfirm with a new break of an SP, then we can re-establish our entry within here. Again, aiming for short-term origins. That isn't the origin, but short-term origins, and aiming for price to run to those points and then allowing ourselves to secure, etc. Or if we come up and hit the higher time frame SP, then if we pull back, a long out of there would be valid. The latter scenario is less probable, because if we hit the SP up here, chance of us pulling back into the low end is not very likely. Right now, this is about to confirm bullish price action again if it takes this high, and then we should realistically be running into our highs with relative aggression. So there's the expansion. So as we were discussing earlier, we have now re-established the bullish narrative. Taking this buy side origin right here is going to complete the two smaller time frame moves that are happening within here. At that point, we need to take this higher time frame SP to validate the next expansion in price. If we do get there, it'll be a lovely run through to ultimately our swing high. Okay, so due to the fact that we've actually pulled back slightly prior to running the buy side origin just above the newly formed high, I do expect price to expand heavily through here. Now, what's actually happened here is we've tapped back in to our original area of buy side, which is the buy side window. Prior to the liquidity being created, we put in a high to a low. That high was taken, giving us a window exactly the same as this window, and this window. We've now run up from this area. If we close back inside this window again, we want to see a nice bullish move out of here. If it doesn't give us that bullish move, we will be tracking this low here as a possible indication of running down deeper into our bullish range here. Remember, we are sitting around the 50-ish%, so we don't want to be too biased or like one-sided within the market, as we know we could pull back into lower prices. That is completely possible. We have started pushing through these highs again. We are looking for, again, what we said earlier, a run of the highs. So a run of this buy side origin. And because we've already pulled back partially once, I would look for a relatively heavy expansion between the buy side origin placed here and the SP, which is 2.3 pips above it, or 2.5 pips above it. If we push through aggressively, then great, we're running up to the swing high. If we pull back deeper prior to hitting this origin or this SP, well, both of them, then I would expect price to only run partially towards our target and more than likely drop deeper into our range. Perfect. Lovely expansion through the high. We're about to hit the higher time frame SP right here. Let's see if it triggers. There we go. Perfect. So we now are set to run through to this high here and ultimately the swing high. So as stated earlier, because we pulled back prior to running this buy side origin, it gives price relative momentum when it comes through these points. Now, I would be expecting price to deliver some form of pullback here, but ultimately we would expect price to get to this buy side origin and the swing high as covered earlier. Alright guys, so some time has passed and the market has pretty much been consolidating within this period. We had a slight look at some of our other pairs, but we are yet to fully analyze them. Now, as you can see, we are running higher. We have in fact hit our higher time frame buy side origin, and notice how at the buy side origin we are seeing consolidation as we generally would expect with a buy side origin. So collectively we have done the following. Now let's follow through from what we started with. Yesterday we had a bearish range with next to no breakdowns, all price action leading us higher. We have then broken the swing high, giving us a bias of bullish. We have waited for price to pull back within the range, in this case hitting a sell side origin. But whether this hits a sell side origin or it hits a liquid low or it hits a point of interest, the result is going to be the same in the way that you react to that. From this point, we have established the structural narrative leading in. We have seen that there is one point of liquidity creating several highs that put in new lows. We have also established a second lower point of liquidity, which has established highs, all putting in new lows. We have waited for the first high of that liquidity to be taken, giving you a window right here. We have then let price play back into said window and establish a smaller fractal window within that. We have then done the same and allowed price to play back in again. Now, it doesn't always do this, but if it does, allow price to tell you what it wants to do, and then you can trade based off of that if it aligns with your bias. We have then taken the SP, and price has continued to run as we thought it would to the higher point of liquidity. Now, the only point left within this range is the external liquidity being the swing high, which is this high right here. Now, of course, we don't have to get here. This is a reasonably high target. We have hit all of the internal targets, and price has delivered bullish as we thought. As we've said before, this doesn't have to run to our targets, and this doesn't have to work every time. We have shown you guys live examples like the US 30 example. We put a link for that down in the description, where price only meets the lower time frame target. It doesn't meet the higher time frame target, and that could have happened here. That's why we always say mitigate risk and secure your positions. As we wrap up here, guys, you can see that price is starting to run towards the final target, and once this hits here, that will be full TP. Perfect. There you go. And right there, that is how you can use swing ranges, liquidity, windows within those liquidity pools, and overall track structure shifting in your bullish direction or bearish direction to then find an entry and a target to aim for. I hope you've enjoyed another live price walkthrough. Even though there wasn't a huge amount to say in the latter half, still plenty of content there for you to digest and follow. As always, guys, if you have enjoyed this video, I hope to catch you in the next one. Peace out.